And to all of you out there listening to this, I want to say you are not alone. There are 53 million family caregivers in the United States today. So if you look around you, a lot of people are experiencing this if you're currently going through this.
All right, I am excited to have Marc Glickman on right now. And Marc, what's so interesting about this is that I started a podcast years ago called How in the Health, and you were one of my first guests on that podcast. And now you are my first guest that is a virtual podcast. So welcome and thanks for being willing to be here and talk about a few things.
I'm always happy to be your pilot tester, Erik. You're phenomenal at what you do and just love educating about this topic of long-term care. So thanks so much for having me on.
Yeah, I think this is so important, and we had it on years ago, but now as this channel has grown, it is one of the most common misconceptions or misperceptions that people have, is specifically around like the Medicare conversation that I have, is people think that long-term care is going to be covered somehow by Medicare, and it's not. So I wanted to bring you on here because you are the long-term care guy, and hopefully you can take everybody through and help them understand what long-term care is and kind of the implications of what it looks like, both of where it's taking place, who's doing it, and then the costs of it, and how people can kind of manage all of that. So, would you mind starting maybe with that of what is long-term care as a definition, and then like the practical use of it?
Yeah. And again, everyone's probably experienced long-term care, but maybe you haven't thought of it this way. The way that the government defines it is uh, needing help with your activities of daily living, and it's expected to last at least 90 days, so at least 3 months, which could be due to an accident and you're recovering from that when you're younger, or it could be just due to old age and having cognitive issues. And sometimes people need care for years and years. And usually it's a spectrum of needs. Usually it starts off with, I need a little bit of help. Maybe I need help with driving or cooking. And then eventually I need help with bathing and dressing. And when it gets more serious, that's usually when the long term care insurance policies kick in and when people need professional caregiving because it's a lot for a family to handle on their own.
I like how you mentioned that not only is it for those who are seniors, but this could happen when you're younger, right? This could take place before your old age. And you talked about the activities of daily living. Could you maybe list those off for those who don't know what those are?
Yeah, and usually we think of them in terms of you lose the ability to do those activities in kind of the opposite order in which you learn them. So when you're, a child, you might learn how to eat, how to bathe yourself, how to get dressed, how to get in and out of a chair, like from a bed to a chair, continence. Those are the key activities, or severe cognitive impairment is another trigger for long-term care insurance because that isn't a specific activity, but it does result in you being needing help, for yourself. And usually, again, that tends to be borne by your family if it's something you can't do on your own.
And another thing that I think people get a little bit confused here on what it is, and this might lead into the next part, is they hear skilled nursing care because Medicare Part A covers skilled nursing, and they think, oh, that sounds like a nursing home, and it's not. So the things that are included in terms of the locations of long-term care, it can be in your house, assisted living, nursing home. Can you take us through like the differences between maybe assisted living and a nursing home?
Yeah, and as people have lived longer, this has evolved over the last 40 years. It used to be that most people got care in a nursing home, and today most people get care outside of a nursing home. In fact, everyone prefers to stay at home longer. So I would say about 75% of people start getting their care in their home from a professional home care aide, and then they might transition to a community setting. About 20% of people get care in an assisted living facility, which might start off as an independent living community and then they move into assisted living. And about 5% get care in the nursing home, typically for end of life needs when you need doctors and nurses on the site and skilled types of care.
And so when we talk about that, what are my options of care? We talked about what it is, but then I think the
Mhm.
next section is kind of who is providing the care? And I think that came up a lot with somebody that I used to work with was just because a child or a family member says that I will take care of you, it doesn't necessarily mean that they are ready or able to provide the care. So when we talk about providers of this care, what does that look like from a long-term care perspective?
Yeah, and we, we've been talking about what are the official definitions, but the reality of long-term care is that it's this gradual process. And initially you need help with, basic activities that are not your ADLs, right? Like we talked about cooking, dressing, going shopping, driving, right? And a lot of times, family members are helping their loved ones, their spouse, their parents to do those things before it progresses into kind of the more of that formal definition of help. So the way we think about long-term care planning is how do we get support for your family to go through that process so they don't have to learn it on their own? And eventually there's a realization that it might not make sense for your family members to be the provider of care. It might make sense for them to be the overseers of professional caregivers. And so, really, for education purposes, we want to raise awareness that there are options out there that can get better quality of life, quality of services than just not having a plan and relying on family unexpectedly. So, as long as you have a plan, you're going a long way towards addressing the main challenge with long term care, which is having a crisis, reacting to a crisis, and not making the best decisions because you're under a time constrained and pressured situation. And plus, having funding and having the ability to pay for professional care really leads to a lot of great outcomes for families that they may not be aware of that those services exist.
Yeah, I love that. I think that there's a couple of things to tie off on that. So one was the viewers of the channel, at least who've been subscribed for a while, have known the story of my mom who had cancer for about 10 months and then she passed away. And when we talk about this conversation of who's going to provide that care, my example was we had her staying at my house for a bit because she was staying at my sister's house. And then she came over to my house for a few days while my sister had some stuff going on. And my mom refused to let me help her. Like she was, I don't know how to explain it other than she was so embarrassed to have her son provide the care for her that she would not let it happen. And so I think that there is these instances of who's going to provide it. Of I was willing, right? The child was willing to provide care for the parent, but the parent just refused it. And so that was an example where bringing in professional help in that instance would have been nice. I think there are other examples of not just that they are appalled by the idea of their child helping, but also the medical side of things, of whether that is injections or oxygen tanks or whatever else is happening there that is really helpful for that. So you also brought up the flexibility to know how to fund this. How can you go into the costs of this a little bit? Again, if
Mhm.
I'm doing this in my house versus assisted living versus nursing home, what are long-term care costs in that regard? And then also the funding options for that.
Right. And really the key, like we talked about, is providing professional care when it's needed. So home care has gotten really popular because A, you can age in place, which a lot of people prefer, but B, it might cost something per hour. So like $30 to $40 per hour. And if you have a really high quality provider that's coming into your home, doing which are difficult services on behalf of your family, you value that a lot, and that cost is relatively insignificant. But when you add it up, you have 8 hours a day of care, and you start adding that up per month, the median cost tends to be about $6,000 to $8,000 a month today, and those costs have been increasing about 5 to 6% every year, faster than inflation, primarily because there's a shortage of high quality caregivers. So the really important fact is, yes, it's going to add a lot of value having that caregiver, but you have to make sure that you have some plan in place and budget to pay for that care, either out of pocket, some people might call that self-funding, or through an insurance company and leveraging the dollars you pay in an insurance premium to get a multiple of that to provide the care. And that's really where we try to educate people about their options. And usually most people are doing both. Most people are buying insurance to cover a portion of the costs, maybe the first dollars of that care, and then they're self-funding the catastrophic costs. Um, And that allows them to afford make an affordable premium to the insurance company, but still have a good plan of action, have that professional care that's provided.
Kind of piggybacking off that, so what you're saying is that let's say that my costs are that $8,000 a month. It's not necessarily that I'm buying an insurance policy that is going to pay out $8,000 a month in the event that I do have a long-term care event. It's $3,000, $4,000, and then I'm figuring out how to fund the other $4,000 just off of my investments or my savings or other mechanisms myself. Does that sound right?
Exactly. And really, kind of our role is to refer clients to long term care specialists that can shop the market, look at all the different types of long term care insurance policies that are out there. There are a lot of different options out there. Figure out which is the best value for you. And if you're getting tremendous value, you're going to tend to want to buy more insurance coverage. If you're getting more marginal value or something you feel like you can invest to achieve, you might buy less insurance, but the insurance itself is going to add a lot of value as a foundation for that plan. And it's going to get you to the top of the line with the best providers. Because guess what providers want? And when there's a shortage, they get to choose those that have insurance, because there's a entity that's funding it, are going to get first in line for the highest quality providers. So there's a lot of different reasons why the insurance adds value, but it could be for the leverage, and it could be for the fact that you have all of these other concierge services and choice providers available to you.
What's the alternative? What's the alternative for somebody who wants to self-fund? They don't have an insurance policy, but then they also don't have the funds for it. Does that make sense?
Yeah, it's tough. And what most people will find is that there is no government program that covers long-term care as a primary plan. Medicare doesn't cover it, like you pointed out. Health insurance does not cover it. The only government backstop, which is a last resort, is Medicaid, which is a program designed for those that have spent down all of their assets. So what we typically will see is people start without insurance. They'll pay it out of pocket until they run out of money. And then once they hit the Medicaid spend down limits, then they apply for Medicaid, which generally is going to provide care in a nursing home. To avoid that outcome, which most people are trying to do, you have to apply for a waiver, and those are really hard to obtain through Medicaid. So there are some programs out there where you can buy long-term care insurance, and once you run out of the money in your policy, the government will actually allow you to qualify for Medicaid early. Or you can obviously rely on your family more to help provide some of that care. So it's kind of a combination of the government and your family members providing the care. So those that don't have much to afford long-term care costs are going to rely more on their family as a result.
Yeah, I think you brought that up too. I think it's interesting to take this from it's not an either or perspective, where it's not either your family is doing everything or a professional or a different location is doing everything. There's kind of this ability to do both, right? Where a family member may want this. And I had some people reach out and say, like, that was part of, it was almost a spiritual experience for them to return the caregiving back to their parents who had raised them.
Mm-hmm.
But just because you have that experience doesn't mean that you also don't have a life that you may have to get out to. And so again, this isn't an either or conversation.
Correct.
It could be a balance of both.
Yeah, it's a really honorable thing to do, obviously, to help take care of your parents who once took care of you, for example. But the best way that you can use your time and add value is to select the highest quality providers. You're going to be involved in interviewing home care aides, looking at assisted living facility locations with your loved ones. That's a great role for the family to play. Sometimes, though, especially if family members are not trained to be caregivers, providing the care is not the right place for them to be. And having them oversee the professional home care aides, that provider, creates the best outcomes for everyone involved. You have a professional that's doing what they do day in and day out. You have the family member that's has a specific role, but it's not to be providing care 8, 16, 24 hours a day. When they have a full-time career, they have a family to take care of, right? You don't want them to have to give up everything that you've worked so hard for them to achieve just because of a care need that you have. So I would say on the other side of that spiritual, honorable experience is, like you experienced, Erik, Your parents may say, I didn't want that for you, right?
Mhm.
And you want to honor their wishes that way as well. So having a plan creates that win-win for everyone involved.
I think the realities of it too. I think that we'll probably have a few people listening here where they're thinking about it for themselves, right? Should I figure out or make a plan around my own long-term care potentialities? But then there's also those who are going through it for the loved ones that they're providing that or doing that. And again, the realities of it, I thought to myself, "Oh, this would be easy, right? Like it's not a big deal." If take the pride of it, I guess, from her perspective out of it or the embarrassment,
Mhm.
but even just, like, lifting and moving and doing all of that stuff, by the time that she was about ready to go, I mean, it was almost dead weight, right? So, physically, for those
Mhm.
who aren't able to do that, and then, again, the training and everything else, I think that to your point of rather than reacting to this thing happening, to be proactive and setting up a plan for it is a lot safer option. We talk about this with all of our topics, right? Whether that's Medicare, finances, estate planning, like having a plan in place is so much better than reacting to something, an emergency. So what should people consider as they're making this long-term care plan? What kind of goes into that or what should they be thinking about?
Kind of exactly the steps that you had talked about. One, who do you wish your caregiver or provider to be? Two, where do you want to be getting care? Because a lot of people would prefer to be in a community setting and they might decide to sell their home and end up in assisted living through independent living to start with. And you can go into facilities that provide a whole range of services, but knowing those wishes are a big part of the plan to start with. Now we don't know like what condition or how long we're going to need care for. So I usually recommend not to plan for like how long you need care, but to plan for how do you get that professional care funded in the beginning of that event. So that's how you can kind of form the plan is if we're in this type of situation and there's a crisis, who's going to be that provider? What are our next steps? And then once you have that foundation built and you have some funding provided for that, you have a longer time to plan for what that duration might be. So, for example, let's say you're diagnosed with Alzheimer's disease, right? And you might not know that that's what you're going to need care for until it happens. Well, if you have the first 1 year or 2 years with insurance or professional caregiving provided, then you can decide, okay, well, this is actually going to last 5 or 10 years. What do we do in the longer term? But you have more time to kind of make that plan once it happens. So I say focus on the start of it, who you want the providers to be, where you want to be, and then the rest of it goes a lot more smoothly than if you start off and you have no idea, then you end up in the wrong situation to start with, and then it becomes a slippery slope that's hard to get out of.
Can you maybe give us some concrete examples? I don't know if you're able to show
Sure.
us kind of the costs around what this looks like if I did want to get some help around a policy. And
Sure.
is there an age range that makes sense? Kind of the health qualifications for this? Will I be denied? Kind of that application of it all as well.
Yeah, there are a lot of reasons why planning sooner has advantages. The biggest one is that most of the insurance companies are going to look at your health to determine what you qualify for and how much coverage they'll give to you. So when you're planning in your best health is when you get your best value and your best deals. You're also going to lock in rates based on your age today. And if you wait, you end up getting a higher price because the rates go up based on your age. But as soon as you buy it, they're locked in. And some of the products have guaranteed premiums. Some of them they review the premiums and they can do rate increases. More people today are gravitating towards those insurance products that have guarantees. So let me go ahead and I'll share my screen to show what it looks like for the cost of a sample policy. And again, this is just a high level estimate. And so you have two main types that we look at traditional long term care. And there are also plans that are called hybrid long term care policies.
No, what's the difference?
Yeah, great question. So traditional long term care is based on health insurance, and it's the one that's been around the longest. But has had challenges in the past with getting the rates correct. So they reserve the right where, just like health insurance, they can raise your premium. Over time, we've seen that these premiums have gone up, and it has to do with them getting higher claims than they expected, and they have to file it with the state to get approved for a rate increase. Today's products are more conservatively priced and more stable. But to give you an idea, this is a sample person who's 50 years old, and let's project out that they need care at age 80. So this is a pay-as-you-go plan, the traditional long-term care, where you're going to pay a monthly premium, but you might pay it each year for, let's say, 30 years until you're 80 years old. You'll have put in, under this example, $81,000 of premium, and the monthly benefit that you can get to pay for that home care aid or assisted living facility or nursing home would be about $7,200 per month. And this would last, in this case, for 6 years. So this is a 6-year plan, and your total amount of benefits could be up to $565,000 of tax-free long-term care benefits. So the way we look at the value is, for every dollar of premium you're paying into this, you have $6.9 paid by the insurance company if you were to use all of the benefits in the plan. And that's how we kind of evaluate the value proposition. On the hybrid side, the difference here is that you have a policy that's based in life insurance, but the long-term care is provided through riders. And the primary benefit of these hybrid policies many times is the long-term care benefit. So you'll notice on the long-term care side, almost exactly the same amount of coverage for long-term care, but a little bit higher price point for that premium. And the reason for that is because these premiums are fully guaranteed. And if you don't use the long-term care, the insurance company is going to pay you a life insurance value instead. Whereas with traditional long-term care, if you never need long-term care, you don't get anything back from that policy. In the hybrid policy, you're always going to get something back. It's either going to be a life insurance benefit or the long-term care benefits. So really, there's, like I said, no right or wrong answer, just trade-offs. These hybrid plans are becoming more popular because they have more stability, more guarantees. It's a very competitive market where we're seeing a lot of new carriers entering with some creative options. Whereas on the traditional side, you have a great group of carriers there still, but there aren't as many new carriers entering the market. And therefore, they tend to be more conservative on their pricing.
On the hybrid side of it, with that life insurance thing, I'm assuming that you're setting those limits. I mean, the individual who's putting this together and working with somebody who can help them, are they setting that life insurance payout amount and then also that monthly benefit amount based on their budget? I'm assuming that's how it's going to work.
Yeah. So usually we recommend talking to a long-term care specialist first, because each of these different products and even the individual insurance companies have different health parameters to qualify for them. The traditional side tends to be more conservative and will turn down or decline more individuals for coverage. Whereas on the hybrid side, they might accept certain pre-existing conditions more often. So that's the first step, is to make sure we understand what do you qualify for, because we don't want you to be turned down, right? That's the worst case scenario. And we can be quite accurate at telling you whether you're going to qualify before you even apply for coverage. But then once you have the policy in mind, you have a lot of flexibility, and the pricing may depend on your gender. So this is a female individual who's 50 years old. Now you can select a different monthly amount. So let's say that you want to start off with something that's higher. This is a $3,000 monthly benefit that's increasing 3% each year. So when you're 80, you have that $7,200 monthly benefit. But let's say you want twice as much coverage. You can set it here, and you'll see all the numbers approximately double. So this is where you have control, where you can decide based on your budget, how much do I want the insurance company to pay for? How much risk do I want to transfer to them for this leverage? How much do I want to self-fund or pay out of pocket? But to your point earlier, it's not an either or. Most people are doing both. And that's where you get the best outcomes, because you have flexibility regardless of what your long-term care situation might look like.
How much does like age and gender come into play here? Like if you were to mess with that a little bit, and we were talking a little bit earlier, the people watching, they can have access to this calculator as well, and they can kind of play with their own numbers. But could you kind of show us what the difference is? Instead of starting at 50, bump that up a bit, and then gender, changing that a little bit?
Yeah, when you come through and you come to the Buddy INS webpage that will be available on this video, this calculator we're actually going to put on that website, so you can actually quote this yourself to get an idea of the cost before you talk to a specialist. We want to make it as easy as possible for you to kind of shop and get an idea of what you want to do even before having that conversation. But let's say you're a male. This is how the rates change. Typically, it's going to be a little bit more expensive for women, because women live longer and need long-term care more often because of that. Okay, so the insurance companies have priced it based on gender because there's a different need for males and females. Aside from that, really age is the other big factor in terms of pricing. So the younger you are, like I said, the lower the price is going to be, and this rate is locked in. And the hybrid side, this is a guaranteed lifetime premium that can never change. Again, if you're closer to retirement age, let's do age 60 here, you're going to see it's a little bit more expensive. But whether you're younger or older, you still get good value in terms of leverage from the insurance company should you qualify. That's really the key thing. They're very selective on health, and we want to make sure that you shop the market to make sure that whoever you apply with is going to qualify you based on your health.
That's super interesting because most insurance that I've dealt with, at least in Medicare, the male is more expensive than the female. So it's interesting that it's flipped on long-term care, and it makes sense based off of what you said, right? They're going to live
Exactly.
generally longer.
Yeah, I will say, and this is in general, what we see with traditional long-term care is that men get much better rates than women because it's pure long-term care. Where with the life insurance hybrids, because the cost for men is higher for the life insurance feature, it's not as expensive for women relative to men on the hybrid side. So women tend to get a little bit better value on these hybrid policies than on the traditional side by and large. But again, there's a lot of factors. There are sometimes couples discounts if you apply with your spouse or your partner, or joint policies. So there's a lot of ways to make it a good value for yourself. But because of that, that's why we recommend talking to a specialist, is they can really shop around and make sure that it fits your specific situation best.
That's great. And on a lot of the videos of this channel, right, we try to bring these perspectives for people so that they know the pros and cons of everything. Instead of a big sales pitch, it's like, okay, here's who this does fit for, and here's who this doesn't fit for. And I don't think that long term care insurance is a fit for everybody on the planet, right? So who kind of is a good candidate for this versus who is somebody who should probably ignore the last 30 minutes that they've spent listening to us, if that makes sense, from the
No,
insurance policy, not the planning
correct.
perspective.
Correct. Yeah, there's always value to learning about planning and to helping your loved ones get professional care no matter what. So we just love the fact that you're on this, listening to this, and you are starting a plan for yourself. When it comes to buying insurance policies, the biggest thing is to make sure that you can afford the premium, right? Because if you buy this and you decide, I can't afford this, and I drop it, that's the only way really that you can't get value from it. You're not going to get much back if you don't continue to pay the premium. So buy what you can afford. Now, because of that, there are some people that can't afford this amount of premium, right? Some people don't have planned for retirement, and we want to make sure you can pay your rent or your mortgage, right? And you have your ordinary living expenses covered first. So I would say people that don't have enough in income or assets to afford insurance, we would tend to recommend take care of your primary needs first before your long-term care plan. And those people might not be a good candidate for the insurance. If you have a lot of pre-existing health conditions, it may be difficult to qualify for long-term care, although there are alternatives now, where you can get really good value if you have pre-existing conditions as well. So we're starting to see, probably 95 to almost 100% of people do have some type of funding option, even if it's not a traditional or a life insurance hybrid policy. There are annuity policies. We have something called short-term care. There's a lot of solutions that have cropped up to cater to different clients from a health perspective. But financially, again, it may not make sense because you don't have your other expenses covered, and those are the people that wouldn't be a good fit.
We saw each other at a conference a little while back, and you had talked about as well the opportunities that people may have to leverage this through their employer, right? So employer long-term care policies rather than direct to individual.
Mhm.
How does that change the conversation around these long-term care insurance options for people?
It just gives us a lot more tools, which we're really excited about. One of the fastest growing markets in long-term care insurance is the employer group space. And sometimes we can even get access for associations and their members as well to group policies. The advantages of those policies are that they have no underwriting, health underwriting. So they're guaranteed issue, which is great because you don't have to worry about pre-existing health conditions. Yet they still offer value like the individual products do in terms of these long-term care benefits. The one constraint is that you have to be actively at work usually at least 20 hours a week. So let's say you're a business owner, you can usually get a policy for yourself through your business as long as you have at least a couple of employees that are also funding this insurance benefit for. Then you can get access to the group policies. And in some cases, the value of those is as good or even better sometimes than the individual marketplace. So just because they're waiving the health underwriting doesn't mean that you have to sacrifice value. So what we do, is we look at both markets and shop, both of those to figure out what's the better fit. And sometimes we do both. A lot of people will buy like a starter plan through their employer on the group side and then add on an individual policy. And those policies do not coordinate benefits. So you can claim on both policies and kind of stack them together, add those benefits together. So there's a lot of things you can do flexibility wise, even with multiple policies.
When you say actively working for at least 20 hours, does that mean that I can only have that policy if I'm working, or is that I can only get on one initially? And then, so for example, if I retire, do I lose that policy, or is that
Uh,
simply stating to get it, I have to be
that's,
working?
that's a great question. Unlike many other benefits, this policy is what's called fully portable. So basically, as soon as you buy the group policy, you get an individual certificate that you can take with you, whether you leave the company or retire, and you have the same contractual guarantees, including usually guaranteed premiums and the fact that even if you take it with you, the rate's not going to change. So we think of them very similar to individual policies because the contracts read almost identically. And there's again, you're not sacrificing any of those guarantees just because you're getting it through your employer. It operates almost identically.
Perfect. So it's just the issuance of that policy is contingent on the fact that you're working at least 20 hours in this example with a certain company size.
Yeah, those insurance companies, what they've realized is on the individual side, there's a higher risk of paying out claims because people that are applying a lot of times do have health conditions, right, that they know about. On the group side, because you have a large pool of people that are getting coverage at the same time, they can spread that risk over a larger group, which is why they're waiving the initial health questions and why they're providing such competitive value. Is that buying power of the group allows you to get better conditions because the insurance company sees it as lower risk that they have to pay out.
What have we not covered on? I want you to come back. Hopefully, I can lure you back to talk a little bit more about this in the future. But in terms of a long-term care 101 idea, what haven't we covered that you think is important for people to understand as they approach this conversation?
I think the biggest thing that we run into is a lot of people have had a prior experience with long-term care insurance. Maybe they purchased it before, maybe they applied for it and got declined, maybe their parents owned it and they had a certain experience with that product. Today's market is very different from products that were sold even 5, 10 years ago. So don't come in with like a pre-existing expectation of what this is. There are a lot of new solutions. There's a lot of learnings that have happened in the marketplace. So come in with a fresh set of eyes to this. Like I said, people oftentimes will say, "Oh, I don't like long-term care insurance because it can raise my rates." And I say, "Well, why not look at a plan that has guaranteed premiums contractually?" They just don't realize that it's out there. So I would say that's the biggest thing is just realizing how important planning is, that these plans still have a lot of value. And this is not like it was in the past. If you're looking at the products, that have been designed to take away the risks of the past. And as I mentioned a few times, make sure to talk to a long-term care specialist because those people that are working in this market day in and day out are the best suited to help you find the best deal. And they're out there. There's a lot of great plans. We see every single day people are getting value and they're just delighted and surprised at how good it is.
That brings up another question for me. So let's say that I am trying to help a parent and they do have a long-term care policy or a spouse or however this is coordinated here. How do I initiate that? How do I initiate those claims to where, okay, that insurance company is now paying that out
Sure.
with that policy sitting there available?
Yeah, what we try to do is we don't want to just be providing you guidance when you purchase the policy and then 30 years later, right, you're fending for yourself. So we've built a lot of strategic partnerships with companies that are like concierge claims filers for you. So when you have a need, we actually have a partner that will help you file the claim with the insurance company as an independent third party at no extra cost to you. And therefore, you can go through and make sure that we're doing everything correctly, both for you and for the insurance company, to avoid any bad experiences. Because we know the insurance company needs to look out for the risk, right? That's their main responsibility. But we want to make sure you have a good customer experience. And I think the best way to do that is to have a concierge claim provider. So, and again, those resources are growing out there. So I have a lot of confidence that we're going to continue to see more and more available services as time goes on.
Thank you for taking this time. Again, I want to have you back because there are certain states that we've talked about before that are either requiring this or proposing that it'll be required. There's a lot of kind of implications around that, but I don't know that that's the long-term care 101 conversation necessarily. So I think that we'd like to have some more videos where you can take a deeper dive on each of these topics, and maybe people in the comments will say what they would like us to take a deeper dive on, and then we can build it around that.
Absolutely. No, I appreciate you raising the awareness, Erik, here. And to all of you out there listening to this, I want to say you are not alone. There are 53 million family caregivers in the United States today. So if you look around you, a lot of people are experiencing this if you're currently going through this. And we're a community here to help you navigate that. Even if you need help with care today and finding a provider, we will help point you in the right direction. So don't be a stranger and don't be shy. Let us know how we can support you.
Mark, I kind of have a tradition here, and I didn't tell you about this, but at the end of every video, I leave a secret code word. And if people have made it this far and they leave it in the comments, then we know that they've made it this far and we can take those comments a little bit more seriously. But I leave that responsibility, the incredible weight of that responsibility, on you to come up with a secret code word that they could leave in the comments.
Okay. So let's do caregiver.
And then in the description, I've got links to your website and where they can mess with that calculator too. So again, if anyone watching, down in the description, you can play with all of these numbers yourself and see if it makes sense for you. And Mark, again, I can't thank you enough. Hope to have you back on, and I appreciate you taking this time.
All right. Thanks for having me on. We'll see you all soon.